Yeah, it depends on your perspective. So as a seller, in most markets, it's still a good time to be a seller. Inventory is still relatively limited. Builders are not very optimistic, so they're not building as much as the market actually demands. And part of the problem, the reason why we're seeing that, is that builders are finding it difficult to build entry-level homes affordably, and that's really what the market is demanding.
Cheryl, in terms of the 5% mortgage rate, Diana said that borrowers, no surprise, don't like fives in their rates. Is this just a case where people have to adjust because this is still historically low? Or has a 5% rate been so long in the rearview mirror that it's going to be even longer in terms of an adjustment period?
Yeah, well, I think there is a lot of difficulty in the housing market right now, a lot of headwinds for home buyers. Like Danielle said, inventory is very limited. We've seen affordability also decrease, especially in that starter home market. So when you tack on higher mortgage rates, people are actually seeing costs rise for housing. And so that, I think it's been sort of propped up the demand for housing in the past several years. But now we're seeing that low inventory and increasing home prices really catch up with people.
Danielle, which cities look most vulnerable in terms of house prices?
So house prices are most vulnerable in areas where there's just not a lot of building. So that tends to be in areas with limited land availability, and also in areas where there's not as much price run up. We've seen inventory start to come back in a handful of expensive cities in San Jose, California, for instance, in Seattle. We're starting to see more homes come on the market. Part of that's due to construction. Part of that's due to buyers taking a step back and maybe reassessing with high prices and high mortgage rates where that leaves them in position to whether or not now is a good time for them to buy a home.
Do rising rates shake out investors, Cheryl, or the opposite? Who gets the upper hand when it comes to a home buyer who's going to live in their home versus an investor who's looking to invest in a home and rent it?
So rising rates are obviously going to impact those that are looking to buy right now, and that's actually going to be a major headwind for them. I think people that have purchased a home in the last 6 or 7 years have actually really taken advantage of those low rates, but that also means that those refi numbers are going to stay down with that low demand. And investors, of course, they're still out there and looking, and I think people right now are looking to actually capture some of those low rates because they are still relatively low compared to 7+ years ago.